Welcome to the deep dive. Today we're getting into something really crucial, but often pretty tricky for couples.
Yeah.
Handling money together. It's kind of like building something big, right? You need a solid plan, whether you're just starting out as a couple or you've been together for years.
That's so true. Money discussions can definitely create friction, but I think it's also a huge opportunity, really. When you figure out how to manage finances like a team, you're doing more than just organizing funds. You're actually building a stronger relationship overall.
Absolutely. So our mission today is to pull out the key insights, the real nuggets from the sources, to help you manage money together, hopefully with less stress.
Okay, let's unpack this. The sources really hammer home that honest communication is, well, everything. But it's not just talking, is it? It's how you talk. How do couples make those first money chats actually work before merging anything? Right. This is where digging into your money mindset is key. It goes beyond just saver versus spender. It's about the why. Were you raised to save obsessively because of scarcity fears, or maybe you value experiences now more than saving for later? Understanding these drivers, your debts, your goals, your history with money, it's critical. The sources suggest setting aside specific times for these money talks. No distractions. Try to keep emotions level. It turns potential fights into teamwork.
Okay, so once you've kind of laid that groundwork, what about the actual systems? Because there's no single right way, surely.
Exactly. No one-size-fits-all approach here. Generally, couples land on one of three main strategies. Some merge everything. All money is ours. It's simple, but yeah, sometimes people feel they lose a bit of independence. Others keep it all separate. They split bills fairly, which keeps autonomy high, but maybe makes shared goals a bit more complicated to track. And then there's that middle way, which is really popular, a joint account for the shared stuff, rent, groceries, bills, and then personal accounts for your own spending. The trick is just being clear about what's what.
That middle ground does sound like a good mix. Togetherness, but also some personal freedom. But then what about fairness in contributing? Especially if one person earns significantly more. How do you navigate that?
Yeah, that's a big one. A really effective way, often overlooked, is basing contributions on income percentage. So if you earn, say, 60% of the total household income, you contribute 60% towards the shared bills and goals. It's pro rata. That usually feels much more equitable and helps avoid resentment compared to just splitting everything 50-50 regardless of income.
Right, that makes sense. So contributions are sorted proportionally. Now, where does the money actually go? How do couples budget together without it just becoming another argument?
Budgeting together is, well, it's pretty non-negotiable for success here, and it shouldn't just be about restriction. It needs to be realistic. Cover the essentials, yes, but also include some room for fun money or personal spending. Otherwise, you just burn out. Doing it collaboratively helps align you on those joint goals, saving for a holiday, maybe a down payment, or that crucial emergency fund. It's about spending with purpose together.
And keeping that going for the long haul. Because life changes, incomes fluctuate, goals shift. How do you keep the plan flexible?
Well, setting those clear shared goals, maybe paying off student loans, investing, whatever it is that makes saving feel more like a team effort. Celebrating the small wins helps too. But here's maybe the most important bit, the real golden nugget from the research. Regular small check-ins. Don't let money become this huge, scary topic you only discuss in a crisis. Just checking in briefly, maybe once a month, keeps things open. It means your plan can adapt easily when life throws curveballs, promotions, job changes, unexpected costs. It's like preventative maintenance for your finances.
That makes sense. And what about that individual freedom piece within the shared finances? How important is keeping some autonomy?
Oh, it's vital. Seriously vital for long-term happiness in the relationship. Even if you share most things, having some money that's just yours, no questions asked, is really healthy. Call it fun money, personal spending, whatever. It reduces minor squabbles and preserves that sense of self within the partnership. The sources are quite clear on how much friction this can prevent.
Okay. But what if couples are trying all this and the conversations are still really tough? They hit a wall. What then?
Yeah, that happens. The advice is clear. Don't be afraid to bring in a third party, a financial counselor or advisor. They aren't just for wealthy people. They can act as mediators, offer objective viewpoints, provide structures for tough talks, and just help you get unstuck when things feel really difficult.
So really, the takeaway isn't about finding the perfect, rigid system for managing money as a couple. It's more about building this ongoing partnership, one based on trust and, like you said, constant open communication.
Precisely. When you approach it like that, with that mindset, you're not just sorting out your finances. You're actually making the whole relationship stronger, building a more solid foundation for whatever comes next.
So what does this all mean for you listening? Maybe take some time this week, even just 10 minutes, to talk honestly about your money habits, your hopes, your shared goals. You might just find that a little conversation can bring you a whole lot closer both financially and emotionally.